Hi, my name is Christina McCarthy. I'm president, CEO of a brand new company called Paycore Minerals. The ticker is CORE, C-O-R-E. On the venture, we are just newly listed, just fresh out the gate as of today. By background, I'm a geologist. We have just acquired one of the best properties in my mind in Nevada. We think we're on the brink of being one of Nevada's newest discoveries, a project located right on the Eureka gold belt, all the infrastructure in place, town nearby, and some of the greatest other projects right along this belt as well in terms of geology and exploration. We've been able to acquire a project that had some past production, and it is now we are now the first company to drill this in decades. It's been over 50 years since anyone has even looked at this and even really known about it.
Christina, thank you very much for coming on the show. I really appreciate it. Brant, you're the new kid on the block here. Well, congratulations on the listing for a start, and thanks very much for coming and telling us about it. Why don't we kick off, because we've not met or spoken before on this story. So can you give us a little bit of your background? You mentioned you're a geologist, but what have you done that we'd recognize?
Yeah, so by background, I'm a geologist. I've been in the capital markets for nearly 14 years now. Worked in various roles such as institutional sales, equity research. We built an exempt market dealer with a couple ex-Brock guys. I spent 5 years working for Rob McEwen as corporate development, and after that left to join a company where we launched the Newfound Gold IPO, which was probably one of the hottest IPOs in 2020. Those are all the geos that I went to university with. So that was an exciting story to be part of that. And then while working there, I was VP of corporate development for a company named Oro Peru, which was sold to First Light Capital. And during kind of in the background, I had known about this project for many years and knew that I could potentially separate this project from this Ruby Hill complex, which was owned by Waterton. And so we were able to do that. It took a few months to get it over the line, because I'm not so sure they wanted to give it away, but we've been able to now acquire this project. And the first time, as I said earlier, we'll be the first drillers in decades. So it'll be exciting to see what the potential is here.
Well, absolutely. And before we kind of launch into the project proper and how you plan to come at it, is just give some of the other names involved. So obviously I recognize you and Danny as part of the management team. Is he active, or is he just a nameplate? Or in case, who's the team supporting you actively?
Yeah, so he is supporting it actively, and I-80 right up until most recently has been very active in supporting me. And the reason being is, when I knew about this project, I asked Ewan to help me go through the data room by leveraging some of the technical expertise that he had over it was Premier Gold at the time. And I used a couple of geos. We worked together to build the model to look in the data room to actually acquire as part of the due diligence of this project. In that process, it was him and I as the directors of this company. He became eventually I-80 spun out of Premier Gold, became an 8% shareholder of Paycore, and he then a year later acquired the project directly next to me. I guess he saw the potential in the data room with what was next door, and which is why he acquired it. And because that is a conflict of interest, that he is directly next door and we share a lot of similarities with our projects, he had to step down as an advisor to the board. Jim Gowans, I'd say one of the top 5 metallurgists on the globe, very well respected. He used to work for Barrick and actually knew about this project when Barrick had owned it. He's a former president and CEO of Arizona Mining, which sold to South 32 for $1.65 billion US. And it was a lead zinc project. So very similarities in terms of metallurgical and metallics here. Another person on the board that's joined us is John Begeman. John Begeman was previously with Premier. He's also on the board of Yamana, and he's joined. he's joined also more recently, and as well Steve Filipovic. He was the previous CFO for Premier Gold, and Ewan used to always say he was the brains of the operation, and he didn't want to be with big corporates and wanted to stay with smaller companies. So we were really lucky to have him join us as well. So you'll see a lot of Premier I-80 sort of similarities there, but they're obviously big, there are a lot of synergies with the projects now that we're working on.
Absolutely. A lot of past success too. So tell me about I keep threatening to get into the project, but I'm intrigued by the kind of setup here. So those are some of the names associated, but if I look at the register as well, it's kind of quite institutional out of the gate, right? So what have you gone out at?
Well, so starting today, we'll have 28 million shares out. A lot. So John Hathaway, he post the closing as of today, he'll own 5% of the company. I-80 will own 6% of the company, and then insiders is about 16%, and it's a lot of mostly management and of course Ewan as well himself personally. And then institutionally, we got a couple institutions in there early, and then also Waterton's one of our biggest shareholders as well, as part of the structure and acquiring this project from them.
Okay, and I read something. You've got very little information, so please apologies from me. But I read something. You've got about $12 million, $12.4 million ish cash out of the gate. So what was the kind of pre-money, post-money valuations? I can't say that.
So yeah, we will have US $12.4 million. We raised that back in December, subscription receipt, and upon the $12.4 million US, we do make an initial $5 million payment to Waterton as part of the structure to acquire this 100%. We do own it now 100%, and they will. That is why they were one of our largest shareholders. We communicate with them ongoing, and they seem to support us in our decisions and are happy shareholders.
Right, but okay, but I guess what I'm trying to understand, because again I can't say it here, is so today you went out at what price in terms of market capitalization?
$2.10.
Right, and yeah. Right. Okay, fine. Okay, makes sense. And the Waterton, the structure of that deal, $5 million plus it says here 35% of the company. Waterton, plow their own track, their own furrow, as it were. What's the deal with them in terms of how long they stay in? How do they dilute? Yeah. All of that kind of good stuff, because they can make or break you further down the line.
That's right. And I think it's a good question to ask right at the gate, because when someone hears Waterton's involved, people want to ask how much are they aligned with you? They're subject to the 36-month restrictions imposed by the exchange in that regard. And, we also, and then from there on, in terms of payments as it's to, ongoing, upon completion of a 43-101, we would have to make a $7 million payment to them. However, if we wanted to pay them earlier, it would only cost us $4 million, which is a lot better, obviously. And I think that for us, that the drill is really going to speak volumes here, and what in terms of drill results that we'll put out, and that we will have the valuation to support that, where we can raise money at a much higher price and make that early payment, so that we can kind of get rid of that right out of the gate. And I think that our shareholders would probably prefer that as well. Yeah.
Okay. Okay, understood. Right, so let's get into the project in terms of what it is that you've bought, what you know in terms of the data available, and then what you're going to do with the capital allocation.
Yeah, so this is, again, located on the Battle Mountain Eureka Trend. It's directly next to the previously producing Archimedes pit, which was also operated by Barrick and is currently now owned by I-80. So we do share a border with them. This is the original Ruby Hill mine. There is so much excitement about this project because at depth, at 700 meters, there's a shaft right to this deposit, and it's only been drilled in a very tight core little network. And so for us, We've recently taken a 200-meter step out from that main core deposit and hit 36.6 meters of 13 grams gold equivalent. I mean, that's a stellar hole. If we were to look at just that main deposit, they only mined it for 2 years via the shaft, and that was because they hit a fault, it flooded the mine, and they had to walk away from it. In the 50s, they just didn't have the technology to pump that type of water. So for us, we want to go back, and we know that there's an existing resource. It's non-43-101 compliant. However, it's 3.9 million tons at about 13.6 grams equivalent, just sitting there on tap. And it's been sitting there for decades. And we're fortunate enough to be able to put together a really good management team, a good technical team, and drill this target.
Tell me this: you had choices, right? You're involved with the Newfound Gold Project, which obviously is one of the best things to hit 2020, and the growth that came with that. I guess you had choices to make as to the type of project that you wanted to go after next. I mean, Polymetallic. People struggle to kind of understand the Polymetallic story because they don't. It can be complicated, right? Why did you go for this asset? Was it a case of, well, it's the first thing that came up, or were there other things you discounted first? I mean, why not go for an easy gold story?
I've known about this project for many years, and it was just unavailable it was not for sale, essentially.
Right.
With myself and Ewan Downing leveraging our background and what we could potentially do with this project, that we had to really twist Waterton's arm to sell it to us. And with regards to the polymetallic question, I absolutely love polymetallics, and that when gold is out of favor and we're in a seemingly bad gold environment, we're diversified in the fact that we have the other metals, the zinc, lead, silver, and maybe even there's a little bit of copper. So for us, we're more nimble that way. It makes us, and when from a fund perspective and the investment criteria that they are looking at, I think we check the box for both. And essentially the optionality of having, an underground deposit or a near surface oxide potential deposit. And we can get into that in a minute as well.
Well, I'd love to. So it's just, you may love it, but what I'm trying to understand is, given the choices that you probably had available to you, and clearly the ability to go and raise capital from some of the names that you've mentioned, I wondered why that rather than a sort of simple precious metal story, which it's kind of a bit more run of the mill, because you then further down the line run into things like when you have to start talking about the economics of these things and producing concentrate and so forth.
Yeah.
How that
that's
breaks
why
down,
I wanted
right?
the best metallurgist,
right?
Jim Gowan,
right?
And he's looked at the metallurgy, and there's already some initial recoveries done in a feasibility study that was done by Hecla in 1974, and so the recoveries were really good then, and Jim believes that we could even improve it more now because it was done in the 70s, and here we are again decades later with way improved technology to do so.
Right.
And so for us, it was, having to be able to, when I looked at my options to think, where do I want to be? Well, I wanted to be in the US. I wanted to be on one of the more prolific mining belts in the world. I wanted to find the next big deposit. And for this was this little gem that's just been like, a diamond in the rough, if you will, because nobody has touched it. And if you were to even search the FAD project online, there's just you can barely even find any information on it.
So how do you move this thing forward with the money that you've got available to you today? There's a sort of non-43-101 compliant resource at the moment, right? So do you go through a process of verification or twinning holes to kind of make sure the data is right?
Yeah.
Do you say, well, we'll continue to step out like you seem to have started to do already? Mm-hmm. Do you do some infill drilling? I mean, how do you come at it? Because you've got a market story to tell. I'm kind of looking back to the kind of success of the market story that was told over Newfound Gold. You kind of got everyone super, super excited real quick there. But then there's a job to be done on the ground in terms of doing it the right way as well. So how do you manage that balance?
Yeah, a two-prong approach. Having an existing resource at depth is something that's a great run a grassroots company. You know, we know that there actually is a deposit sitting there untested in terms of the other geology around it. So there's this project that has a very tight core of drilling. And for us, we looked at what the mineralized footprint is of what we know right now, which is, so of what we know right now, it's about 5,000 by 5,000 feet, just on that little area of data that we've acquired. This doesn't even touch all of the down fault and the faulting of the geology that hosts this. And that was just because when they drilled this in the 40s, it took them about 8 months to drill one drill hole. You can imagine that, waiting to drill that long. And so after taking so long to drill, they knew the deposit was there. They sunk the shaft and started mining. So leaving behind this, big resource at depth, and we are going to test we're going to confirm that all of that mineralization that was done there many years ago is in fact there. And so we've announced 3 drill holes so far. And then we will also do, very systematic approach step outs. And that's because, we want to be able to confirm the lateral extent of it. From there, again, and I'm talking about what we already know is just a tiny bit in this little resource that exists. It's 5,000 by 5,000 feet. We will test the down dip extensions of that favorable host rock to see what could be potentially down there. It's just completely wide open. And we love that there's a structure here, because the structure is what, are the conduits and fluid paths for mineralization. The second prong approach is the near surface target. That was, if you jump to our website and looked at our presentation, you can see the aerial view of all of the old workings. And it was just really primitive mining methods, tunneling and adits. And it was done in the late 1800s, early 1900s. And I just can't believe that this hasn't been followed up on and had any work done on it, because we believe that they could, with those type of mining methods, they certainly weren't efficient enough to mine all of the surface mineralization. So we're going to also target and it's all oxide. We actually just drilled our first hole in the oxide target. It's all oxide. We just have to get the results back now. And it's got that Carlin overprint. So this is a very unique deposit. And, I don't think there's another one on the globe that will average out to be as high grade gold. And the reason I say that is it's a carbonate replacement deposit. So for all those technical people or non-technical people out there, usually the gold grades in these kind of deposits are tend to be low. But because we're in Nevada and we have that Carlin overprint, the gold grades are really there's a higher gold grade in this. And so that's why this deposit is just going to be so different, so unique from any other system like this on the globe. It'll probably average to be around 8 to 10 grams gold, and it'll be the only one that has those type of characteristics.
Okay.
Because again, of it being Nevada.
Interesting. And so with that oxide, and obviously with 180 things are nearby, they're kind of open pit. Are we looking at this is going to be are you going to potentially start with a kind of open pit solution, or what are you envisaging happening with?
So we can be nimble in both of those ways.
Right.
If the results come back encouraging for the near surface target, which is the open pitable oxide, then we could focus drilling on there. If the gold environment that we're in, or if the market conditions change and we want to preserve capital, we could potentially just focus on the near surface drilling to preserve capital. However, I think that the target at depth, the underground mineralization, because we are so certain about from the old data how to target these holes, we believe that that's where the high grade will be. And so we think, having those two-prong approach, it'll benefit our shareholders. It'll benefit us to be able to, again, diversify and be nimble in, different market conditions.
Okay. That's interesting. You mentioned that a few times, different market conditions.
But I should say actually one more thing on that.
Go
on. Both the near surface target is that we know that it's oxide, and directly next door, I-80 are currently producing off of their leach pad right now, their residual leach off from the Archimedes pit. Well, because we're on patented ground, our time to permitting is actually it's far shorter. We could potentially work out some arrangement with I-80 next door to use their operations, or in some agreement where we can process our ore over on their pads.
Okay, so that gives some economics or sense of economics down the line in terms of that kind of tolling agreement. So I80 next door is good. So let me come back to it again, in terms of keeping it simple, just for this introductory call, sure. Which is, let's put that kind of two-phase thing in terms of people understand. In terms of dollars spent or meters to be drilled with each of those options, what are you thinking, given your budget?
Yeah, so we will drill. Phase 2 is just about to start right now, and it'll consist of 3,800 meters. We will have a ratio of underground to near surface holes. We are just getting back the last hole right now from phase 1. We're going to plug all the information into the database, the model, and see what we think that the focus should be going forward. I know Goldspot very well, and like I said, me and Denis went to university together, and I really believe in the technology that they have there. And so we may engage Goldspot as well to do some downhole structural work for us for geophysics, and right. Use them. We're just in discussions of talking about what potential resources they could provide for us. Okay,
so there's some real obvious targets. You talked about the near surface oxide component, obviously, with adits and tunneling everywhere. How much of the old data are you going to be able to put into a database and actually analyze and do some more analytical targeting, plus whatever you do with Goldspot? I mean, how long does that process take?
The old data will give us a very good direction of where to drill. However, we don't have any of the old core, we don't have the old assay certs, so we have to do this really all of ourselves.
Gotcha.
We think we could be at a spot, drilling about 30 holes, where we really understand what we have. And, in the next, if we wanted to go that route within the next, 12 to 18 months, look at where we stand with building a resource. I think it's going to be closer to 18 months. These are deep holes, and they take some time, but, we just added a second drill rig. So on that, we should be able to drill these holes quicker. One drill's quicker than the other. I won't get into the technical details of all of that, but we'll be able to speed up the process a bit so that we have a news flow to market and some exciting things to be able to talk about.
Well, just give us a bit of a clue what's going on there in terms of the drill. I guess rig number 1, diamond, and rig number 2, what?
RC rig.
RC, cool. Okay.
So what you do, it's a lot quicker, and you can drill right to the top of the water table, and then you switch to the core rig after. Right.
And so I'm working with kind of water tables. Obviously, further down the line, people are going to be saying, well, permitting and licensing and EIAs and all those wonderful things that come along with when water's involved. How do you cope with it, with the drilling? And you talked about, the more modern techniques for extracting or removing water from your work area. But what problems does it give you? What's to add to the sort of cost or per meter when you're drilling?
Yeah, well, so right now, to drill, obviously we need the water to drill. We have the ability or the option to source water from the old shaft.
Right.
Right next door, we could pay for water off our neighbors, I-80, or from the state. In terms of the water for the project and the dewatering aspects of that, when they were mining for the 2 years from 1956 to 1958, and they hit a fault and it flooded the mine, it started at around 2,000 gallons per minute and got upwards around 9,000. And just to put that in perspective, so 2,009 gallons, what does that even mean? Well, down the road over at Cove, they're dewatering at 50,000 gallons per minute and have to maintain that at 25,000 gallons per minute. So just to give you an idea where, here's something like, 3 times the size in water, they're managing it quite well. But again, it's all about how now we have technology to do that, whereas in the 50s they didn't. And so I almost call it like a leaky pipe back then, because it's more manageable now for us.
Yeah, no, well, yeah, but these are the sort of engineering feats that always amaze me. How you guys sort of come at it, further down the line when it really starts to matter. Well, Christina, I appreciate you coming in, just giving us that little overview of one. There's a new project in town, folks. Polymetallic, you love. And do you think the market is going to start to love that in this current macro environment? As you say, it swings one way and the other, and maybe you do have the flexibility to report in gold, silver, zinc, or whatever you want.
Yeah, well, we report in gold equivalent right now, and you could do a zinc equivalent depending on how your grades and how high the zinc content is. For us, I think that, again, I talk about, being on the brink of this sort of new discovery. And I think that, the drill results will speak for themselves. I think if we continue, and you ask how the market will perceive this, I think if we continue to put out drill results such as we have been in the first 3 holes, and we, just to put it in perspective, one of the old holes, the historic holes, it hit 92 feet of 20 grams gold, 476 grams silver, and 20% lead zinc. I mean, that's phenomenal. And so when I think about the type of holes that we're drilling now and the confirmation that we're doing, I think that we continue to put that out. I think the market will see that and, will make their own choice on how to value that. And I think you see that with, a Newfound Gold, for example, and the type of holes that they put out. They have a great support system, obviously, with Eric. I think we have a great shareholder base, and we have a great management team to really take this project to the next level.